And instead of beating ourselves up, which is our tendency as human beings, we wouldn't be human if
Naturally.
we didn't.
Mm-hmm.
Um, just start to practice a new thought. So you're going to be carrying two thoughts in your head. One where, oh, but I didn't do it, and then one that perhaps create a line for yourself that you can believe, like, okay, well, I'm going to give it another effort. I'm going to give a daily effort. I'm going to commit to this now, and I'm going to continue. So it's done. You can't change what has happened or what you
Mm-hmm.
didn't achieve, but what you can do is actually change the meaning it is having for you. What are you making your you not achieving that goal mean?
Mm-hmm.
What are you making that mean about you? It doesn't have to mean anything.
Yeah.
It can just mean that, okay, so I learned some stuff. What did you learn?
Yeah.
And what skill sets now that you've discovered about yourself that you can apply going forward? So you can use the past for things. I'm not someone who spent a lot of time in the past, um, but utilizing what you can to serve you is the way I would suggest that anybody, focus on the past. So anything from there that was a learning opportunity, learn it,
Yeah.
apply it today, and step forward.
And if nothing else, the last 2 years have given us a lot of lessons. So there are a lot. There's a lot to learn.
And we've all learned a lot. Are we
We have.
willing to, own the things that we've learned and frame it in such a way where it serves us?
Yes.
Is going to be the question that you might have to answer for yourself. And when you ask yourself the questions, be willing to sit and hear what the answers are.
Thank you so much, Nadine, for all of that. We found it very informative, and I can guarantee you, I will be doing a vision board for 2022.
Awesome.
And for you, our viewers, let us know in the chat whether you are into the vision boarding concept. Do you think you will do it? Tell us in the chat. So we're now moving to another discussion, one that I'm really excited about. We have with us VM Wealth Management Advisor Trace Gale, and he joins us now to talk about how you can stabilize financially after the holiday spend and maximize on investment opportunities for 2022 with an effective financial plan. So now Trace Gale is a marketing and sales professional with approximately 15 years experience, cross-industry experience. His experience spans hospitality, telecommunications, banking, and finance in that order, right?
In that order.
All right, and he's an alumnus of the prestigious Kingston College. I mean, it's no Arden, but we can forgive him. So Trace joined the VM Wealth team in April 2019 as a wealth advisor with a focus on corporations, so that's small, medium, and large corporations. In this role, he acts as a guide for corporations to create and maximize on the best investment and business solution opportunities. Trace holds a Bachelor of Science degree in Tourism Management from the University of the West Indies Center for Hotel and Tourism Management, Nassau, Bahamas. And he's here in a different capacity as wealth advisor and the man who can help us stabilize our finances. Trace, thank you so much for being here.
Thank you very much for having me.
So, Jamaicans, we tend to do a lot of big spending come Christmas time. Gifts are to be bought, curtains must change, sheets set, the whole works. Food, all of that. What happens come January morning 2022? How do we stabilize and just get back on track with our finances?
First and foremost, I think initially it starts with you budgeting.
Mm-hmm.
So planning for this financial year. Plan your monthly spend. If you are taking loans to do your spending for the Christmas, then you pay down those loans, right? In your budget, you are going to inject investment. Treat it as an expense and ensure that it is paid on a monthly basis.
Mm-hmm.
So you can look at it in two ways. You can look at it as an expense, or you can look at it as you paying yourself, right? And ensure that you remain consistent throughout the year. If you are able to start in January, where it tends to be tougher than the rest of the months,
Mm-hmm.
trust me, it becomes easier when you now approach December, and you will not have that financial crunch headed into the next January.
Okay, got that. So we just came out of a conversation where we were talking about vision boarding and goals.
Mm-hmm.
When we come over to the financial side, we are talking about SMART goals.
Mm-hmm.
Tell us more about that. What are SMART goals?
All right, so goals differ from individual to individual. When it comes to investment, it's not a one shoe fit all kind of thing. All right? It differs from individual to individual. However, all the goals wrapped up into financial independence, as we use here at VM. Financial independence really is your ability to acquire anything that you want without any financial strain. And that is the goal, right?
Yes.
So in order to, in order to achieve that, it starts from my initial discussion, my initial explanation, where you just have to remain consistent with your investment, and over time, you'll reach there.
Okay. So we've set the goals, and we have this plan to be consistent. What is the first step to take if it is that we want to begin this investment journey?
All right. So the first step to take, I like to say there are 4 pillars to investments. So the first pillar is to start now. Right? Start now. Not next month, not next week, start now. The second pillar is to be consistent. So it means setting a standing order on your account.
Okay.
I need to pay this $5,000, $10,000, $20,000. All of that depends on your the capacity of your income.
Yes.
Right? The third pillar would be diversification. Ensure that your fund is diversified. So you have different exposures to sections of the market. So depending on your risk appetite, that percentage of diversification will be different. Right? The final one is stay the course.
Okay, very important.
Don't pull it for that new shoes
or phone.
I think they've changed from Bridget sandals these days. I don't know what the ladies are wearing.
I don't know.
You understand? Don't pull for anything else, but just stay the course. And that will help you to achieve your goals. Your goals now, when it comes to your goals, what you need to consider is, all right, are these long-term goals? Are these short-term goals? How much do I need to invest in order to reach those goals? Okay. You understand? So these are all thought processes that comes in when you are setting your goals.
All right, so just break it down for us a bit in terms of short-term, medium-term, long-term goals. What is a short-term goal?
All right, in financial language, a short-term goal is anywhere between 1 to 3 years.
Okay.
All right. Medium-term goals, anything that you need to accomplish in another 5 years. Long-term is anything in excess of 5 years.
So we have to determine which category or goal falls in.
Yeah, but I mean anything up to 3 years, so not necessarily 3 years, but it can be 6 months, a year. Yeah.
And I guess determining which category it falls in will then help us to know
what steps to take.
What steps to take in terms of what investment options.
Most definitely.
All right. So say for instance, a short-term goal, 1 to 3 years. What does that goal look like in terms of specificity? I mean, you've spoken to people over the years, so just pull from your experiences of what a short-term goal is and how somebody made a kind of plan and remain consistent in terms of achieving that short-term goal.
Okay, so a short-term goal may be simply just the acquisition of a motor vehicle.
Okay.
I am not able to acquire a new vehicle because the monthly payments differ.
Yeah.
However, in acquiring an older vehicle, you need to make a deposit. I want to reach that deposit. How do I make that deposit? I want $300,000 in 6 months.
Okay.
But now I need to consider what my deposit. I'm saying $300,000 will be the deposit.
Yeah.
That would be some sort of a short-term goal, and it goes further depending on what that goal is.
Okay. All right. So we know that there are different investment options, as I mentioned before. You have the local stock market and you have the US stock market. How do Jamaicans get involved in the US stock market?
Very simple process. It's as simple as you getting onto the local stock market. So first you express your interest. We do a little questionnaire on you and you complete an application form.
Yes.
That application form will be submitted to Interactive Broker, which is the international brokerage firm that we use. And then a profile will be created for you. And now you get access to Interactive Broker where you can do your trades. We support you by you can do your deposits through us, right? And we get it receipted to you, the platform, and we also guide you by giving you stock picks, stock recommendations, analysis on the market, and analysis on some products,
Okay,
some companies.
and that advice, how is it done? I guess it depends on whenever the client is available. So
I mean, not necessarily, because what we do on a daily basis at VM really is we do. Trust me, if you're a VM client, you would
have access.
You would realize that you get daily update on the market.
Yeah.
We do weekly stock picks, and every now and then we do research and analysis on a particular company that is listed. So, and that is the same for the international market.
But I imagine for persons who are, say for instance, just getting started, I guess you get more granular and get more specific with.
Yeah, so that is when you stay very close to your wealth advisor.
Definitely.
You become friends.
Yes.
Right? And then you're guided on a day-to-day basis. Because I've started with clients who had no expertise whatsoever when it came to the stock market.
Yes.
I have my clients, those same clients, are calling me now, Trace, what do you think about Grace? Just for argument's sake.
Yeah.
Yeah, I saw this on the stock market, and I realized that last year the profits dipped. What you think is going to happen next year? And I'm like, oh, okay.
Yeah,
I mean, that's something to look into.
Yeah.
And just like that. So when you garner the interest, then you realize you start reading up, and you sometimes become the advisor.
Yeah.
And I get clients from those clients because, yo, Trace got me started. And I think you should, because look at my portfolio now. And I'm like, wow.
Nice.
Yeah.
And in terms of, people have this concept that investing is for people with money, people who already have money. What's your response to that?
A complete myth.
Okay.
Complete myth. Because, I mean, if we have money, we don't need money. It's a way to build wealth. Investment is to build wealth. So we here at VM Wealth, we have portfolios starting from as minimal as $10,000. Comparative to the competition, you'd realize that's very low.
Yeah.
And then you can add like $5,000 per month, right? We go up to $50,000. You had $10,000 per month, and then we have US portfolios that start from $500.
Okay. All right, cool.
We here at VM, we believe in inclusivity. So we set our portfolios at a point that you can get involved and you can build your wealth. Yeah.
Yeah. And you mentioned that investing is to create wealth.
It is to create wealth.
So how do we move from just this short-term goal to investing to create generational wealth?
All right. So generational wealth for me is ensuring that every year you're building wealth. And I'm going to explain. It seems like I'm repeating
Every year
myself.
you're doing what?
Building your wealth.
Building your wealth.
How do I build my wealth year over year? So there is this nagging thing called inflation. Ensure that whatever you're earning per year exceeds inflation.
Okay.
Understand? And you continue to build on that. So this is where you sit with your advisor, talk everything through, right? What portfolios work for you, because then outside of the portfolio that works for you, then there is the risk associated with those portfolio and what you can take. We call it your risk appetite.
Yeah.
What kind of risk you want to take, right? And then on top of that, now you will realize that it's a foundation for you building on your generational wealth. You open an account for your child. If you are doing $50,000 for yourself, you do a $10,000 for your child. They don't necessarily need that money right now. I mean, depending on the age of the child.
Yeah.
So you continue to do that over time.
And it grows.
And when that child reaches a particular age, then you start giving that child a statement. This is what I've done. This is how I've done it for you. You understand? Your allowance, you'll be surprised the allowances, because I think my disposable income was way more when I was in school. You understand? So you realize that they'll have a lot more money and they'll start now investing. You understand? And that's setting the tone for the generation. So I've done it. My child now does it, and it will pass on over time. And now later on, your wealth become theirs. And it's building on top of it. And it gets It's just a process and it cycles.
And you mentioned earlier in the conversation about diversifying the portfolio. Why?
All right. So I believe in diversity because so we have several products here at VM. We have several classes. Let's put it that way. We have unit trust. We have unit trust that ranges from low risk to high risk. We have equities trading, very high risk because of the volatility of the market. Then you have bonds. Bonds are medium risk, but long term, right? And then we have government securities, which are really repurchase agreements, right?
Okay.
Those are very low risk, all right? But the returns on those portfolios differ based on risk.
Yeah.
So the lower the risk,
The
the
lower,
lower
the
the return.
Yeah.
The higher the risk, the higher the return.
Or
But you don't want to put everything. No, we don't use loss.
All right.
Right? No, think about it. So you don't want to put all your eggs in one basket because
Okay.
stock markets is the best opportunity to earn, but it's very volatile, right? So you put your money in the stock. You want to put some money in the stock market, but not all of it, because if last year or this year was something to teach you about all your eggs in one basket, last year the market fell about a little over 30%, right? That would have seriously hurt somebody who had just gone into it. But what you would have realized is that had you been in it 3-4 years ago,
Yeah.
I mean, yes, you would have seen the numbers drop, but you still wouldn't have lost.
Just a scrape.
You understand?
Yeah.
Just a scrape. You understand what I'm saying? So what you want to do is ensure that, okay, based on your risk appetite, you arrange your portfolio likewise. Okay, I am very moderate, so I'm going to put about 70% of my investment in a moderate portfolio, like a unit trust portfolio. Say, for example, a real estate portfolio that continues to generate even in this harsh time.
Yeah.
Right? And then I'll expose myself to, say, 30% of high risk. Should the market fall, right, I'm still not
Severely impacted.
severely impacted
Yeah.
because I still have 70% of my portfolio that consistently grows. You understand?
Following, yeah.
That's what diversity helps us with.
Okay.
You understand? And why I said we don't use loss, because the concept of investing is when the market falls, the prices fall.
Okay.
When the prices fall, that's the best time to invest.
Okay. Opportunity.
You understand?
Yes.
That's opportunities. Trust me. In 2008, we had the same issue with the market. It fell.
Yeah.
And then, fast track a decade later, we're winning the best stock market in the world.
Yeah.
Right? So it gets back. So you want to be sitting sweet when it sets back. Right? So
And I guess from the earlier conversation about consistency,
consistency.
I guess patience and consistency will
right.
help you along your investment journey. So tell me something, Trace. What is your outlook for the investment scene for 2022?
All right. So what you've realized is that 2020, the market fell. And looking at Jamaica Stock Exchange, not Jamaica Stock Exchange, looking at the stock market locally and internationally, and then we're looking at the entire market, right? The market, not all parts of the market, money does not leave the market, just so you know. So people get scared, people pull it from a portfolio, it sits somewhere, it doesn't leave.
Yeah.
Right? It just moves from one area to the next. So what people would have pulled money from the stock market, but it went somewhere else.
Yeah.
All right? What happened last year, 2020, was that the market fell. 2021, it starts to steady, but it's not. Some companies grew, right? Some continue to struggle, but the average is that it's a little tilt. It's not anything extravagant. 2022, with the more take-up of vaccine, people are getting comfortable. Companies are reopening. There's a return to not the normal that we've been used to, but there's some sort of return to normalcy, right? It means that the market will now start to surge. So I'm expecting an awesome 2022.
Okay.
So the plan is to prepare yourself for that, because if you can get the cheap investment, and I say cheap because units are low price now, then you can be sitting on the good side when it surges.
So all right. So if there were to be three steps that people or potential investors
Mhm.
should follow for 2022, what would that be? Come January morning, what should they do?
I'm going to go back to my pillars
Mm-hmm.
for this. Start now. Consistency is, I can't stress it anymore. You have to always remain consistent,
Yeah.
right? The diversity of the portfolio is important. It is important, especially for long-term goals. And stay the course.
And stay the course.
Stay the course.
All right.
And when you're investing, do not put it there to say, okay, I'm going to put it there to see what I can get and take it off. All right?
Okay.
Because that can, trust me, when I just started investing and I started with equities, and when I see that market moving, I tell you, my heart is like, I couldn't watch the market.
Oh, you pull out the money already?
No, I didn't actually pull, but I
Oh.
was like, no, I can't do this. I stopped watching like the daily movements because the thing is that the market will move throughout the year,
Yeah.
but it's where it ends is what is important.
Mm-hmm.
But it's like planting a tree. We don't watch it grow, but we ensure that it's watered.
Mm-hmm.
We ensure that it's fertilized. We do the things to ensure that we get growth. And it's the same way you treat your investment.
Yeah.
You understand? Do what it needs, give it what it needs to grow, and let it grow.
Okay. And just before we go, for persons who have never invested before
Mhm.
and probably don't want to do the everyday watering, as you just mentioned,
Mhm.
probably a unit trust account is an ideal investment option for them, you think. How do they get involved with investing in the unit trust with VM Wealth?
All right, so first and foremost, you open your account with Wealth. Very easy process. It's proof of income, which is your last pay advice, proof of address, any utility bill payable in your name, two references. We can share the categories with you, lawyer, doctors, similar to opening a bank account.
Mm-hmm.
We now also have any client with an updated account, which means that all documents for them are updated, can be a reference as well. Then ID and TRN, and then you complete some documents. That's it. You're onto the system.
Simple.
When you look at unit trust now, your advisor will sit with you and discuss your risk appetite. So if it's an equity portfolio, and by equity portfolio I mean an equity unit trust portfolio,
Okay.
right? That is also high risk. We want to know whether or not we look at categories to fit you in. What age bracket do you belong to? So the age bracket helps us to determine, can you take
This
too
risk.
much high risk?
Mm-hmm.
You understand? Or if I'm 50, I probably don't want to risk all my investment. So I do this percentage of it in an equity unit trust. We do in a moderate like property portfolio, or we have a money market portfolio. It gains small interest, but it's very consistent, right? So we diversify based on that. So that discussion is tailored based on the individual.
Okay. So there you have it. Thank you so much, Trace, for being here with us today. This has been a really meaningful conversation. And it reminds us that even though we can enjoy the holidays, it kind of pays off on our long-term goals, that is, if we just focus and just stick to the plan. So thank you for being here. All right, so keep sharing your questions and your comments in the chat. We would love to hear from you, and our team will continue to answer your questions. If it is that you would like to get in touch with us, with the VM Wealth Management team, please just send us an email at wealthinfo@myvmgroup.com or call us at 876-960-5000. Make sure you're also following the VM Wealth YouTube channel and on our LinkedIn pages so you can keep up to date with our financial education and our investment content for the rest of your investment journey. I am Darian Reed. This has been Wealth Talks. Thank you for joining us. Have a happy holiday and a blessed new year. Stay safe.